Hello, everyone. I'm Joseph Giarraputo, the founder and editorial director of Global Finance, speaking to you from New York. Today, I'll be speaking with Crosby Mkhwanazi, head of transaction banking at Standard Bank, who joins us from Johannesburg. Standard Bank is the leading African provider of treasury, cash management, trade finance, and investor services. Last year, Global Finance named them the best bank for transaction banking in Africa. Crosby, welcome.
Thank you. Glad to be here.
What digital and other innovations are you introducing to help transaction banking customers overcome challenges in today's economy?
Well, thank you, Joseph. I think for us, it's important. Our innovations are digitally led, but they're not only digital. We do quite a lot of different things to help our customers in a number of different aspects, whether that's a change in technology, but also in processes, risk management, and the like. What I would say at the moment is quite topical for us and our clients, and where we're helping them a lot is in the areas of trade finance and working capital. So at the moment, there are a number of different challenges, whether that has to do with the movements of goods and any particular delays. The import cycles can be a bit long at times, and the ability to distribute goods and the certainty of when goods move on the continent is quite difficult. So the ability to be able to put solutions around that is quite important for our clients. And we spend a lot of time innovating for various bespoke working capital and trade finance solutions. We are well positioned for this because obviously we are on the ground in the markets that we operate in. We understand the risk very well. We understand the logistics and the various mechanisms of the various working capital cycles, and we play a strong role in financing. However, we also have introduced in the past few years digital solutions like Trade Online that help clients to be able to digitally upload documents and follow their trade import or export cycle through the particular platform as well. That platform is also enabled through automation in the back ends for faster and simpler processing, which is quite critical for customers. And of course, we've used various tools like artificial intelligence for document checking to be able to accelerate the import and export cycle for our clients. In the payments environment, also a number of innovations are at play. For us, our innovation cycles are normally led with bespoke solutions around our clients. So we tend not to build a number of just general capabilities. We have a very strong basic platform capabilities and payment rails, but we deliver bespoke solutions for our clients. We have delivered, a bespoke collections and payment solutions for the healthcare industry in Ghana, which was built around them. We've built another solution in Kenya and a number of other markets in East Africa around port authority for port customs and duties to be paid digitally through a particular platform that is customized around them. But we play obviously in all elements, whether it's from wallets to card, EFT, and various solutions in the payments environment.
On a related note, how do you stay competitive in payments and other products, given the increasing presence of non-banking players like e-commerce platforms and telecom providers?
For us, I think being competitive doesn't just start with the technology or with the solution. So how we stay competitive is our client engagement. I mean, I always put that at the front and center of everything that we do, and it's how we structure and organize our team. So before one is able to deliver a solution that is competitive, you've got to make sure that you understand your clients very well, and we take pride in doing that, and it's a rigorous process in our environment. And we understand everything from client strategy to client operations, their challenges and what opportunities they are looking for is something that we really spend a lot of time in. And if you look at most global innovation cycles, they emphasize really understanding your customer very well as a key component to innovation, which we do very well as Standard Bank. So that's a key component of how we stay competitive. That being said, we understand our strength, which is in our footprint, our risk management. We've got a very robust, stable, and secure systems that are, available on multiple channels, on multiple rails. We've got a very strong global markets and foreign exchange business that supports the transaction banking business across the continent, and that enables us to be front and center on payments. However, I must also put down that we don't see necessarily everybody as competition. We find a lot of benefits for our customers and for ourselves through collaboration. So in that world of fintechs and new banks, we have found a number of partnerships for us to work exceptionally well in delivering solutions to clients. So the way that I see it in our business, we always make sure that we are phenomenal and great at what we are good at. And we find partners who are delivering exceptional solutions to clients, and we partner with them to be able to deliver a holistic end-to-end solution for clients as well. The other element that is vital for us is we have adopted a platform approach to solutioning with clients. So, for example, we used to be very pedantic on having our own standard bank channels for clients to interact with, but we've developed one hub through our digital team where all our solutions are available to clients, as well as non-standard bank solutions that we think are important to clients in their banking or working capital or payment cycle as well. So our solutions are available on one hub as well as our partner solutions. So we partner with fintechs and other organizations to be able to deliver best-in-class solutions. And we find that works very well in staying ahead and being competitive, as opposed to only making sure that we deliver standard bank-only solutions. We find that can be quite limiting.
I see. How do you address challenges in creating frictionless payment solutions that are also fast, efficient, reliable, and secure?
So a number of things are quite important in doing that. And I think that's the holy grail for most bankers at the moment. For us, it's about the technology architecture and the technology platforms we use are quite critical. So payments are very technology heavy and driven these days. And if you leverage technology properly, you can get a lot of leeway towards fast, frictionless, and actually even cost-effective payments across the board. So our architecture, we leverage cloud quite considerably because the hyperscalers give us quite a lot in terms of computing power, as well as a number of other out-the-box solutions that are available on these cloud platforms for us to be able to leverage. So cloud leverage is a big foundation for us. And then modularized services. So to keep the architecture dynamic so that we can innovate very fast and to be able to deliver the solutions in the mechanism that you described, modularization is quite important. So no longer monolith, sort of type of architecture. And then integration points that are quite dynamic through APIs is another component that we leverage quite strongly in being able to deliver those types of solutions. So what does that mean for us? It means that we're able to deliver more solutions to clients, because if things are, designed in a modularized way with architecture and cloud, which many providers also operate on cloud, it means plugging and playing, which is usually not as simple as that sounds, but plug and play is more available than if you're not on cloud in a modularized sort of capacity. And then you're able to leverage a much lower cost of operation because, again, with cloud, you buy the capacity that you need, as opposed to being on-prem and having a large capacity that you then have to grow into sort of over time. So, again, if you structure your cloud capabilities properly, you can really lower your unit cost, and having a frugal designed architecture, or at least with frugality in mind, you can really lower the cost of payments. Then the other component that is critical for frictionless payments is automation. We've been able to leverage a number of solutions, everything from the way that the channels on the front end are designed to be able to do as much upfront validation as possible, to pre-populate as much information that we have as possible, so that for clients that are using web, it's a couple of clicks and they're able to make a payment through the channels, or be able to do direct integration directly into client systems, whether it's through traditional host-to-host or APIs or other mechanisms. We have quite a large number of options for clients to be able to do that, so that they don't have to come out of their own systems, log onto ours to be able to effect payments, but they can do so directly within their own systems through direct integration with the bank for a seamless capability. So having that kind of option on the front end is important. The way in which we collect information and pre-populate is important. And then through automation in the back end is also vital. That enables you to lower cost and to have payments to be near real time to the extent possible, with regulations allowing as well.
Okay, finally, what's next on your digital agenda to help standard banks stand out in the market?
So for us, in how we stand out, as I said, is I think client intimacy and understanding remains vital for us, and we will continue on that journey. And that informs our innovation cycle and what comes next. As I said, we don't innovate in dark boardrooms on our own. We innovate around and with clients, and we have found huge benefits from that. And as we continue to scale that more, we think there'll be more to come around that. We are very focused in the sectors that are driving growth in the markets that we are in, whether that's infrastructure and energy, whether that's sort of insurance and other financial services. Natural resource businesses like mining are critical, agriculture fundamental, and then of course, as I mentioned, sort of energy is also quite important. So we innovate around sectors and we innovate around clients. As I've mentioned, we've got a number of bespoke solutions, as I said, in Nigeria and Kenya that we've built around ports, around healthcare. We're currently working on a number of solutions with telcos. So as to what's coming next, we are working with telcos around accessing banking infrastructure coupled with telco infrastructure to be able to deliver payments to allow for better access into the areas where perhaps as banks we haven't reached before. So we see mobile money off the back of telco partnership as a huge benefit going forward. And then the second piece that's also fast growth for us that we are developing and what's coming next is supporting remittances into Africa. In a number of countries now, in fact, if most countries around the continent, remittances are now the largest form of foreign currency inflows into those markets. So that shows the amount of individuals working outside of Africa that are now, putting money back into for families and to support their communities back home. So again, partnership in terms of being able to support remittances is a critical component. And there it's about accessibility, distribution, foreign exchange availability, but also to lower the cost of remittances. If you're sending money from abroad back home to your parents or to your children, you can't afford for 10% or 5% of that to be eaten away through fees and charges. So we have an intention to help facilitate the lowering of those costs and providing the best foreign exchange rates so that as much of that money that one is sending back home lands in the hands of those that you intend to.